Hey guys, happy Saturday. Welcome back. We are just days away from GameStop's Q2 2025 earnings, maybe the most bullish I've been ever going into a GameStop earnings announcement. You might hear some people from time to time without integrity tell you that I hate GameStop. They are lying to you. They don't like the fact that I swing trade GameStop. They don't like the fact that I said in 2024 that it was going to go down to $10, which it did. They don't like that I sold on the run up after that at $48 and $60. And they don't like the fact that I urge common sense over cultism. GameStop's down 28% on the year for 2025. But in this video, I'm going to explain to you why I am bullish about Q2 and very excited about the remainder of this year. Let's get right into it. As we went through on last week's video, Michael Pachter has revenue estimated for Q2 at $832 million. And using my GME calculator, the spreadsheet, I think that even with a revenue that low, if it were to be that low, when we factor in the interest and the unrealized or realized gains from GameStop's Bitcoin holdings, we could easily see a earnings per share double what he's forecasting. He has 16 cents. 32 cents would not surprise me, but GameStop must maintain the margins and must decrease the SG&A as a percentage of revenue from last quarter to hit those sort of numbers, to get that sort of operating leverage. In the previous quarter, Q1, we saw a 55% surge in collectibles revenue year over year from $136 million to $211 million. This is a higher margin business, and that is something that I'm going to be looking for here in Q2. Can GameStop maintain that high collectibles revenue, that high margin income? If they do, this could be a great quarter, because on top of that, we have the Switch 2 sales, which will be hitting for Q2. Although other consoles did have a decrease, so it remains to be seen for Q2 how the hardware numbers come out. But it is my bet that the revenue from Switch 2 will exceed the decreases in the other consoles. So stay tuned for Tuesday after hours and let's find out together. The other thing that I'm excited about for Q2 is we get a fresh look at the balance sheet. In Q1, GameStop had about $6.3 billion. They raised another $2.7 billion from the sale of convertible bonds. They spent $500 million or so on Bitcoin. So I think we should expect to see in Q2 cash and cash equivalents probably around $8.5 billion, another $500 million of digital assets, giving them $9 billion. And then, of course, we have to factor in the debt. The convertible bonds subtract $4 billion for debt that will eventually be due. I know a lot of people like to ignore that and say, cash versus the market cap. You can't do that, but it's good enough to be excited about the fact that the company has $9 billion of cash, because that is investable money that Ryan Cohen and team can use to transform the company, to transform earnings when they put the cash to proper use. And it's good that they have been conservative. It's great that they're making 4.5% interest on it. But what really is exciting to me is the potential of what could be done with that cash when the moment is right. And I have no timeline for when that is. It doesn't really matter to me. Take your time, Ryan. Find the right investment. If this cash is properly deployed, then you could see transformation in the way that the market values GameStop, because it could transform earnings. The final thing just to dream about a little bit is short interest. It's currently, last official report, just over 16% for GameStop. The cost to borrow is kind of low, 0.38%. And if GameStop has a good beat on Tuesday and the price starts moving up, keep in mind that my theory, based on understanding convertible bonds, is the short interest, you should expect it to go up if the price is going up, due to that delta hedging that the bondholders will be employing. So just something to keep in mind. Short interest will likely go up. There will be some short selling as the price pushes up, so that they maintain a delta neutral hedge. It is hard to say when we look at the short interest what percentage is hedging for those convertible bonds versus someone that might have a directional bet against GameStop. My belief is that the bulk of the short interest is mostly currently convertible bond hedging. But, you know, if I'm wrong there, if there are a lot of people betting against GameStop and they have a beat and the price is able to get some positive appreciation, you could get a little bit of extra kicker from shorts closing after Tuesday. So let's cross our fingers for a beat on those numbers. If we are correct and the revenue beats and the earnings beat analyst expectations on Tuesday, the other thing that I just kind of wonder about, and I can't tell y'all how this is going to play out, is how is the market going to look at basic earnings per share versus diluted earnings per share? Because GameStop has all of these bonds, they have to report both, and we have a substantial difference between basic shares outstanding and diluted shares outstanding. Keep in mind, if, well, maybe not all of y'all are aware of this, but according to GAAP rules, if you have convertible bonds, that is potential dilution. And in any quarter in which the company has a positive earnings, the company must report both basic earnings per share and diluted earnings per share. I'm looking at the weighted average shares outstanding for Q2, probably going to come in around 543 million for Q2. And, you know, at the end of the fiscal year, if they don't issue any more shares, the fully diluted shares outstanding is somewhere around 590 million. I don't know how the market is going to value, and we're looking at PE ratios. How are they going to value GameStop's earnings? Is it going to be off of basic earnings or diluted earnings per share? Because that affects what the price target we could assign to GameStop. It's a big difference looking at 497, 543, or 590 million shares when you're doing that division. That information I think is worth knowing. It's worth keeping in mind. And along with you guys, I look forward to seeing which number Wall Street focuses on as they try and revalue GameStop, assuming that revenues are good here in Q2 and assuming that we can make some assumptions that they will continue to be good into Q3 and Q4. This is a company that is in the midst of a transition with growing profit margins, plenty of cash on the balance sheet. There's really not a bearish thesis unless GameStop just totally borks this one, and I am not expecting to see that. I'm going to cross my fingers and hope that we have a beat as all of us expect. If you guys have been following my channel for the last couple years, congratulations. You have had some great swing trades on GameStop. You probably know that I typically sell my shares right before the quarter ends, sometimes minutes before the quarter ends, ahead of that earnings call. This, I think, is a chance where maybe we do something different. Maybe this is finally going to be a quarter that Wall Street doesn't smash this stock down after earnings. It is in GameStop's hands to deliver a revenue beat, operating profits, and improvement in SG&A. So the onus is on them. And I'm not making any predictions about GameStop. I don't do that here on this channel. Too difficult still with the amount of store closures and the amount of change that they have going on. But if we just look at last quarter and they can maintain that sort of trajectory, I think that it is a reasonable speculative bet that GameStop could have a very good Q2. And people ask me, Tony, why do you gamble around in GameStop? You know, why don't you pick other stocks? Look, I'm basically a value investor. I like companies with a long history of profits and positive net income, but I like speculative bets too. And I think that the most important thing is to separate from the cult behavior, separate from the hopium, pay attention to the fundamentals, understand how Wall Street is valuing the stock, and then have impeccable timing. Buy it when it is relatively inexpensive, and when it gets overvalued into big runs up, those are your times to take some profits out of the table, wait for the froth to come back down, and then repurchase it if you still love the stock. At the end of the day, all I want to see is people happy and making money. And if that does not describe you, then hit that subscribe button. Make sure and smash the alerts so you don't miss a single GameStop update. No cults, no hopium, all your comments welcome. Please leave me a comment and your thoughts down below. I am Tony Denaro, and I will see you on the next video.